Hey, what's going on, everybody? My name is Evan, and welcome to the YouTube channel. Today I'm going to be telling you guys about my bullish thesis for Carnival Cruise Lines and why in the short term I think the stock will double up, as well as long term could even triple or quadruple, and then on top of that pay some massive dividends. So starting out, I'm just going to go through all the risks that come along with this stock and this company and why I think they're actually a bit overblown and why I think the risk of bankruptcy is not as big as a lot of people make it out to be. I think it's actually very slim. I think it's not obviously not impossible, but I think it is extremely slim. So anyway, yeah, I'm going to get into it all of the risks, all of the things they've done in the past few weeks, as well as some stuff they talk about in earnings call, as well as the next couple 2 to 3 years and why I think this stock is going to just obliterate the market, obliterate the S&P 500, and then pay some extremely fat dividends on top of all of it. So starting off, I'm not at all worried that they're going to make it through the coronavirus. Obviously, it's bad short term. They're doing nothing. All their ships are parked. Basically zero revenue. But long term, they have massively delevered. They are selling 13 ships, will cut down on costs and maintenance fees and keeping staff on just to keep up ships that aren't doing anything. They're not generating revenue. They're just sitting in ports. So they are selling some ships to cut down on costs. And as they've stated in the earnings call, on the other side of this, they're going to be a much leaner and more effective and efficiently ran company. And a lot of people like to bring up how they raised capital at a 10% interest rate, which, yes, they did do that. But as stated in the earnings call, they raised even more through several other rounds of capital raises at a total interest rate of 5%. So with that said, I think their debt burden is going to be a lot less crushing as people originally thought that 10% would be. Obviously, 5% is a lot more manageable than 10. And also, as stated in their earnings call, they can make it through to the end of 2021 with zero revenue. That's how much capital they have raised. But obviously, they're not going to need to go that long without sailing, because they did say in the earnings call that on August 31st, they are going to return to sea, starting in Europe and Germany specifically, as well as some other countries that should be coming back shortly, such as Italy was another one they mentioned. I think they had said they're probably going to start back at 50% capacity on these ships, and that is still operating profitably. They can operate as low as 30% occupancy on these ships and still be profitable. That's huge. A lot of countries are beating coronavirus a lot quicker than the United States, so I think a lot of people think, oh, it's going to be a while before the United States comes back to cruising. And that might be true. I actually think it'll be a lot sooner than people think. I think a lot of people overlook the highly profitable business of cruising. I don't think people really understand that this is one of the few companies that can operate at 30% and still be profitable. Like, that's their minimum. So all in all, with the risks, I do understand that, yeah, it's bad when a company goes months with zero revenue. Obviously, that's not good. But they have the capital to make it through. They have a really long runway with a lot lower interest rate on that debt as people originally thought it was going to end up being. It's not 10%. They stated on the earnings call that it's going to be 5%. It's total 5% interest rate on that debt, which that's very manageable. They cut their dividend. They run these ships lean. They are selling ships, so they're delevering. They are cutting costs. I think they're going to be fine. They're starting sailing at the end of the month. And this is something I think Wall Street and a lot of retail investors are actually sleeping on. Because if you look at the stock price, this has not been factored in at all. It's like this is totally flying under the radar that they're going to get back to sailing. Like any other company that was at zero revenue, but then is like, they're not doing what Tesla's doing in increasing revenues by 50% every year. They're not even increasing them by 100 a year. Like this next year, if we take the $13, $14 stock price, whatever it is now, and we factor in the fact that they're going to be going from zero revenue to billions in revenue, why are we still at 13? And this is why I think that as far as stock price, like I don't like to look at stock price and judge a company based on that. Obviously, we need to look at the company itself, stock price is irrelevant and should just follow the company. Sometimes it doesn't, and that's what I think is happening now. I think the stock price is not factoring in the fact that they're going to be sailing with a very manageable debt load. But anyway, we'll come back to that. 3 ships are going to start sailing in August at the end of the month. What they're doing is they're taking people off the coast, driving them out to sea. They're going to have a great time, spend lots of money, buy lots of drinks, gamble in their casinos, all that stuff. It's going to be great. So much pent-up demand. They stated in the earnings call that they have no issues with demand. Not only is it pent-up demand, but it's also new bookings. About half of it is new members, like it's new people signing up to cruise. So it's not just people rescheduling their cruises, and it's not just pent-up demand from, diamond status boomers that want to spend some money, which, we love those diamond status boomers. So I think starting at the end of this month, a lot of people are going to see that, oh, hey, Carnival's cruising again. Let me buy the stock because they are going to be fine. They're cruising. Their revenues are shooting up by thousands of %. But yeah, I think it's going to be a bit of an iPhone moment where people realize that this company is actually growing their revenue by a considerable amount. I don't think a lot of people realize that the fact that they're going to start cruising again is huge. The fact that, oh yeah, country by country, we're sailing again. As soon as retail investors and Wall Street and everybody realizes, hey, this company's sailing again, they're going to be fine. Their revenues are through the roof. They have no issues with bookings. A lot of people want to cruise. There's so much pent-up demand, and there's so much new demand. I think when people realize this, we're going to see the price skyrocket, and that's when I'm going to see my position probably double, and then I will continue to hold, obviously. I'm a long-term investor. I wouldn't be surprised if over the next 2 or 3 years I saw 400% gain in this stock, as well as in a year or two when that debt load is more manageable, that dividend will come back, and I'll continue to hold. I'm primarily a dividend investor, but when I see a company that's fantastic, otherwise massively profitable, I can't help but to buy in and hold it for the capital gains as well as the inevitable dividends that will come back. And not only is, coming back and sailing in Germany and Italy soon after, not only is that huge for the company, but also Pfizer just got a $2 billion deal. And this is a bit speculative. I'll admit that. It is a little speculative, but Pfizer did just get a $2 billion deal from the U.S. government to produce a V-shot by the end of the year. And I think once that happens and once that goes through, there's no reason that wouldn't happen and why that wouldn't help not only just Carnival Cruise Line, but any other sort of recovery stock, any other vacation or travel stock. I wouldn't be surprised if we saw the tech giants like Apple or Amazon or Facebook, any of these big companies that have just been dominating throughout coronavirus. I wouldn't be surprised if we saw some money rotate out of those and into these recovery stocks. So yeah, anyway, 2021 bookings, as stated in the earnings call, are back to historical ranges, like as if nothing ever happened. The future bookings, they're normal. They're in normal ranges. Everybody wants to cruise still. Everybody thought that COVID would have destroyed demand, especially since Carnival Cruise Line's got a lot of bad press because of this. As stated in the earnings call, this has not affected them at all. Everything's back to normal. They have 50% of those bookings are new cruisers. And I think this is actually a huge sign that things will return back to normal as fast as they can. Like, as humanly possible, things are going to go back to normal as long as they're allowed to. Like, as soon as we get some travel restrictions lifted, as soon as things are legally allowed to go back to normal, they will. I think there's huge demand, huge pent-up demand for this company. Just any travel in general. Like, I've gone on 2 vacations the past couple months, and it's like everybody is out wearing masks, and you hear small talk, and a lot of people are like just over it. A lot of people just want to go live their lives, and I just think that anecdotal evidence has been backed up by those 2021 bookings. I think not just as a cruise line, they're going to go back to normal. It'll be fine, but also a lot of other recovery and travel stocks will too. To wrap it all up, this isn't really advice for you as a viewer per se. This is just what I'm doing, what I see, where I'm putting my money. I've put a couple grand into this stock, and I do plan on holding it for the next 10 years. I think it was Warren Buffett that said if you don't want to hold a stock for 10 years, you shouldn't hold it for 10 minutes. And I do fully intend to hold this until this company recovers, as well as going back to paying dividends. Like I said, I'm a dividend investor. I do want to build that passive income. I come from a family where my parents, they have real estate and they have rental income. And this is kind of my own way of building that. So I'm not in this for a quick buck. I'm not in it for the recovery, the V-shaped recovery, and then I'm selling it. No, I'm not doing that. I'm in it for the long run. So this is more of just a defense for my thought process in this stock, and something I can go back and look at, as well as maybe give you guys some insight on some of the research I've done. And plus, you shouldn't really invest in a way that doesn't allow you to sleep well at night. This is a volatile stock. There is a lot of risk. I think it's not as much as people make it out to be. I think it's very manageable risk. Obviously, don't forget to diversify. This is about 10% of my portfolio. Some people think that's too much. I tend to think it's not enough. If I'm going to put my money into a stock, I do want it to affect my whole account. Like, as much as diversifying can protect you from the downsides of a stock, it will also protect you from that upside. You're not going to see as much upside, and I want that upside. But with all this said, at the end of the day, one of two things is going to happen. One, they go bankrupt, the whole stock goes to zero, all investors get wiped out, or two, they recover. We're talking about time here. Don't be so zoomed in on a stock that it's like, oh, it's going to be very volatile the next month or two. No, think about it like in the grand scheme of their whole company in the next 5 years. What do you think is more likely to happen? Is it likely that as a whole entire planet that we will get over this virus and move on and this company will go back to normal? Or do you think it's more likely that they're going to go bankrupt because they won't be able to sail by the end of 2021, which, that's their allotted runway of cash that they have already got? Is it more likely that they're going to start sailing at the end of August and getting revenue and adding countries and countries and countries? Or is it more likely that all of a sudden all that gets wiped out and then they go bankrupt? I think it's a lot more likely that they're going to recover slowly but steadily over the next 2 to 3 years and just be fine. And they're going to get dividends back. The stock price is going to skyrocket. I personally have been adding, before that big June spike, I was somewhere around $14 a share as my average cost basis. But since it has come down since then, since it was low, I held the spike, and then I'm holding all the way back down. Like, I don't plan on selling this company anytime soon. I am not in it for the short term. I'm in it for the long term. I think they are going to recover just fine, and they're going to add more and more countries that are allowed to sail and that have beaten the virus and have contained it and all that. And I think their revenues are going to skyrocket. I think the debt is very manageable, and I don't think their brand has been hurt by all the bad press. So with all that said, thank you guys so much for watching. Subscribe if you want to see more stock market videos. You just kind of use this channel. I just started it. It's kind of just what I am doing and what I see in the stock market. It's not so much advice, Just take the information I give you and mix it in with all the other research you're doing, Don't rely too much on one source. But if you want me to be a source of your stock market stuff and just kind of hear what I'm doing, make sure you subscribe. So yeah, thank you guys for watching. See you in the next one.